Well, a number of things. You mentioned books. I mean, I'm always going through books. I have an incredible stack here on my desk of books that I purchased that, I'll take one down every couple of weeks. That never ends. I would always recommend that you be reading, books nonstop. The other thing that I'm focused on, or starting to spend more of my time focused on, is artificial intelligence and learning about its potential impact in commercial real estate, how to use it, what tools are out there that can I utilize. Um, it's a very confusing space right now to be, I describe it as the Wild West. It's it's this sort of explosive growth sort of field. Um, However, there are there's a resource called or website rather called ACRE, which is run by a couple of fairly well-known commercial real estate veterans, incredibly competent individuals that teach real estate modeling classes, very advanced classes, and really all things nuts and bolts for real estate. And they have created a number of free trainings, modules, etc., with regards to artificial intelligence, and they give their opinion on where they see the industry going, its potential impact, what you should be learning to stay ahead of the curve, which I think is incredibly important in today's day and age. So that is a resource that I would highly recommend as well.
Hey, Michael. Thank you, man. Thank you for that. I was looking forward to this day. Michael, let me see if I get your last name straight. Vulgarakis?
Voulgarakis, exactly.
Vulgarakis. Great, 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 great. Yeah. Yeah, every conversation we have, which was just a feel, but it was great talking to you. So that's why I was expecting so much for that. And I only know that you are a real estate investor, but I don't know your background. Can you tell me a little bit about that? What was your journey until you became a real estate investor?
Well, it really started as a young man. My father built homes, and I worked on those homes, growing up in various stages, whether it was working with a roofer or someone pouring a foundation, painters, carpenters, masons, electricians, etc. And when I finished undergraduate school, I ended up I was working a corporate job, but I ended up finding a condominium to buy that was pretty beat up inside, and I renovated it with my own two hands. Sold it, made a good amount of money. Where I realized, well, okay, I just made the same amount of money in about 9 months that I did while working a whole year at my regular W two job. So there's really something here. I just enjoy the process of going through the renovations, and I did a couple more of those properties. A couple more similar properties where I bought a condominium, renovated it, flipped it. Some I held long term and rented out, and then eventually I had an inclination to buy an income producing property, but I really wasn't so sure about how to go about it, and I was worried about not knowing enough. Essentially, I wanted to become more educated. This was kind of before a lot of these current education platforms were widely available, such as Bigger Pockets and all those podcasts. So I went back to graduate school um, for a master's degree in commercial real estate finance. Took a job in commercial real estate in New York City, and sort of the rest is history. I had a number of different roles in commercial real estate: appraisal, underwriting on the debt side, asset management, and my partner and I jumped off about 10 years ago and started buying properties again on the side. And now we're just doing it on a full time basis.
No, awesome, awesome. Uh, so you had a taste of what was it like to invest, already start flipping. Why? What was the mindset? What made you go back to, okay? Let me study for a bit. I think I need what, and then I'll go back to it. Or you didn't know that you would go back. So at that time, walk me through that. What was your mindset? What made you go back to study and then, yeah.
I figured the best way to really learn is to go work for a company that does, what I wanted to do.
Oh,
So I get the actual, you get the in class experience in graduate school, but then I have the real world experience, which is oftentimes, different than classrooms, right? The real world is where things are actually happening, where you're going to learn the most, and that's why I had, taken that path.
okay. I see. And was it exactly what you were expecting? Did you learn things that otherwise by yourself you wouldn't?
Yes, I believe I did. Um, you know, I have full confidence based on the formal education from school, and then the education that I've received by working in the industry full time for close to 20 years. Um, that experience is really, you can't replace that ultimately. And the connections that were made as well are incredibly valuable. So I have absolutely no regrets regarding the way I went about it.
So you felt, well, no regrets. You felt prepared and you knew which way you would go at that time as well.
Well, I knew which way I wanted to go. However, when I finished before I finished graduate school, the Great Recession happened.
Okay.
So um,
Remind me, 1952? No.
no, no. When I say that the Great Recession, I mean the financial collapse that occurred in 2006, seven, and
Ah,
eight.
yeah.
In
No,
Yeah,
of course, 1952, what I'm thinking about. But yeah, I don't know. Just came this this year in my mind.
so the I had intention of working for an owner operator of property, but because the job market was so bad at that time, I took the job that I could get, which was a commercial real estate appraiser, doing work that was not for real estate lending because there really wasn't any real estate lending at that time. The market was simply had simply dried up. So I took that role, which taught me some things that a lot of people wouldn't have access to. I was dealing more with corporate real estate and partnerships and things like that, things that don't stop because you're in a recession. So, for example, if there's a partnership dispute, the partners have to get a third party to decide what their assets are worth in order for them to split up. Right, that doesn't go away just because there's a recession occurring. Right,
Yeah.
but real estate lending did go away, as well as the acquisition of new properties. So no one was really growing their portfolios in 2007 and 8. They were what's called pencils down, right? They were not underwriting new acquisitions. They were just trying to keep their existing assets afloat and run them well. And so there really weren't that many options out there. So I took that role. And then after a few years, when the market started to thaw out, meaning lending started again, people started to buy properties again because the bid ask spread on them now made sense for a seller. I mean, excuse me, a buyer. Then I got a job on the debt underwriting side um, doing loans for bridge debt as well as permanent loans. So what I essentially had a front row seat to was watching operators buy distressed assets at bargain prices in 2010, 11, 12, etc., picking up all these assets on the cheap. A lot of them were very rough, right? I mean, units that had buildings that had been cannibalized for parts to keep other units afloat. Um, Incredible amounts of deferred capital expenditure. But what we did as lenders is we provided them some debt. Obviously, they came with equity to buy these properties, fix them up, re-tenant them, put professional management in place, and then either refi out or sell those assets. And I watched a lot of owner operators create an incredible amount of wealth in that 5 or 6 year period right after the Great Recession.
Oh, it seems that what you're saying is that what you learned by observing what was happening back then in 2008, and allowed you to, okay, this is a good path. And also it seems that what happened back in 2008 is happening now. Does that make sense?
I would say that it is the same. I don't think it is nearly as bad as what happened in
Oh,
2006, 7, and 8. Um, I don't think values are falling nearly as far, and there's just not as much distress in the economy. Um, these two, if we're having a downturn now in commercial real estate, meaning prices, interest rates went up, prices are coming down. I don't think the same type of bargains are to be had today as a buyer could pick up in 2010, 11, 12. But to your point, there is softening in the market and there is a price adjustment. So I think it is a good time to be out there hunting for properties and taking down properties at really really good basis at this point. So in that instance, there is a parallel, if you will. But
okay,
this
okay,
is
yeah,
sort of the beginning of the next market cycle.
got it. Makes sense. Yeah, that's what I was trying to figure out. What how do you see what happened and now? Because, well, there is some kind of economic distress now for sure. Okay. And what's exciting for you now? Develop any projects? Uh, what's happening?
Really, just looking for deals, um, and what we call screening. We are just looking at an incredible amount of deals, bidding on those properties to try to find something where we can confidently say to investors, this is an excellent price to be buying a property at. It's in an excellent location, really has everything going for it, and we're going to create value for investors. And we're happy holding this type of investment long term, if need be. So deal hunting in and of itself is an exciting adventure.
Yeah, I can see that how your experience could pay it off because you've seen several cycles. Um, yeah, it's really safe to um, evaluate a deal or an opportunity with that mindset. Um, I see that. Really good. And if you take that, which big transformation have you recognized that you had, um, or how uncomfortable was it watching and learning those things?
Well, I would say that the transformation and what I was always trying to drive at, meaning my goal, was to know the business so well that I was confident to put my own hard earned cash into deals because it is an incredibly capital intensive business, right? And if you buy something, because it's an illiquid asset, you can't easily get out of it, right? This is not stocks or bonds where you click a button and you're able to exit your position. So if you buy it, the transaction costs are very high to get in, the transaction costs are even higher to get out, and you're essentially stuck with it. So if you do not buy it right from the beginning, what you've just done is created, in some cases, right, not all, but you could have created a nightmare scenario for yourself where you now have an asset that you paid too much for that's not going to cash flow nearly as much as you thought. And essentially, what you've done is created a job for yourself, but you're not going to get paid nearly enough for the brain damage that you're going to incur. And that's what I was originally fearful of. Before I went back to graduate school, I recognized, yes, I can read some books. Yes, I can, join some groups and whatnot. But there's really no substitute for rolling up your sleeves and being actively involved in the business without having your own money at risk at that point, right? You get to see all the inner workings without risking your own capital. But then when the time is right, when you're able to recognize a good deal much quicker within within minutes. If I open up a package, I can tell whether or not I want to um, spend any more time looking at that deal. And what you're ultimately trying to get to is a decision very quickly of whether you're going to either spend more time on it, maybe you'll spend more time on it, but you have to ask some more questions, or absolutely not, I'm not going to spend any more time on this. And that way you're able to, sift through many deals to try to come up with the one that, you think is best.
Right. So, in order to avoid the uncomfortable and have a peaceful mind, just do your research, understand everything in the ins and outs. Wow. Was there any moment that you doubted yourself that you could make that happen?
No, I can't remember that. It's like learning anything, right? The deeper you get into it, the more you learn, the longer your track record, the more you recognize patterns, and you know what to look for, what questions to ask. You also develop an instinct, right? In any profession, whether you're an athlete or whether you're a musician or whether you're in business, you develop that instinct where you can quickly say, this is a good thing or this is not a good thing. And that allows you to make decisions far quicker. But it takes a lot of work to get there, ultimately, just like anything else.
Yeah, just like anything else. It seems that what you're saying as well is I heard from another investor. He evaluates, let's say, underwriter evaluates return on effort, right? It seems that you didn't put a name like he did, but it's the same. Wow, is that gonna give me a nightmare or no?
Correct. Correct. And throughout that time I spent working for uh, companies that were either lenders or owner operators of real estate, you are learning all the tricks of the trade, right? There's no substitute for time spent in the trenches, slogging it out, if you will, and coming across all sorts of headaches, problems, um, and making mistakes, watching other people make mistakes. You're just absorbing all that information as it occurs, and that just it only helps out your instinct and your decision making abilities.
Right. Yeah. Yeah. That's one thing that we all need to understand and remember every day. It's just give it time, right? But then I have to ask, would you think that it's a patience thing, that we need to allow ourselves to spend time and keep learning, and that's just the way it is? It's patience, or trust the process, or maybe it's not one of each, it's both. Do you have any?
Well, I think it's both. The patience piece, I think, is incredibly important in anything that anyone does, any endeavor. The trust the process part of it, my inclination is to say that it depends on the process, right? Depends on what you're trying to do. If you're trying to buy a piece of real estate, um, I think I've found that a lot of people are very quick to just say, "Oh, this is a great deal. I want to buy it." They haven't really fully vetted that opportunity, the market, where the property sits within that market, the streets. They're looking at some high level numbers and immediately, putting a bid in at the asking price, and saying, this is just a wonderful deal to themselves. So they're sort of talking themselves into buying a deal, when in fact, I don't think they've done a deep enough dive, into the property. And I think that's where the things become risky and dangerous. Because again, if you buy it, you get tied up in it, and now you've just created a job for yourself that you're not going to get paid for because it's not going to cash flow well. Or, if you haven't budgeted in a roof replacement cost within the next 2-3 years, when that cost comes and your cash flow gets crushed by that, again, you're working to replace a roof, you have no cash flow left, or even worse, you're coming out of pocket, and then you're saying to yourself, I'm spending all this time and effort on a property that I'm not getting paid on. Now, you could be increasing the value of that property for, if you do a certain capital expenditure project, right? If you redo the whole property, fix it up, let's say you do the roof, you repave the parking lot, you paint it, you put new windows in, etc. You could be increasing the value of the asset for sure. But you have to recognize that if you might not get cash flow off that asset for a number of years until you've improved it, and until you've either gone from a bridge loan to a perm loan, or until you've sold it. So you have to understand what it is that you're actually getting involved in. And I find that there are a number of primarily investors. They think, oh, I invest in a building with a sponsor, um, and I expect this cash flow. But if that sponsor, or if the individual who's buying the building on their own without outside investors, has not fully understood all the inflows and outflows of cash that will have to occur to run the building, both from an operating expense and income standpoint, and as well as a capital expenditure standpoint, as well as a debt market standpoint, then you can potentially end up falling into one of the many pits that are surrounding that property, without even realizing. So again, it just goes back to education, right? And I would encourage any investor who either wants to buy buildings on their own, or who wants to invest with a sponsor, to not just jump into the first deal they see, to look at many deals from various sponsors and ask a lot of questions, because only by looking at many deals can you start to get a feel for the mechanics of how a deal will work and what to expect out of it. And only then can you really determine where on the risk return spectrum is a particular investment, and whether or not it suits you, and your family, right? Your spouse, your significant other, right? Because a lot of people get involved in properties that might be riskier than they originally thought, and because they're riskier, there's more moving parts. more things can go wrong, more hiccups can occur. It's not saying that they can't get through those hiccups, but a lot of people say, I've heard, well, I'm in this value add deal. It was a heavy renovation, but it's not cash flowing now because they had to spend more money on some unforeseen expenses. They may very well come out of it just fine because that money that goes to upgrade a unit with nicer countertops or cabinets or etc. is not necessarily money that is just being burned off. It is what we call accretive to value. It will actually create more value because it'll attract a higher rent, but in the meantime, they thought they were going to be getting cash flow to live off of, and they're not. So again, it's this expectation setting and understanding, what is this actual investment? What are the risks? Am I prepared to invest in a property like this and go through these hard times, if you will?
Yeah. So two things are dangerous: looking for the shiny object, right? And disinformation. Disinformation is dangerous for you that is in pursuit of the investment or assets, whatever. Or and also I think it's disinformation is dangerous for the market, right? Because it could cause a bid war, or yeah, and if it causes a bid war, then like we are seeing in single family, people um, overbidding just to get the property, and in the end, overpaid.
Correct. Now, my humble opinion is that a single family residence that someone intends to live in versus a income producing property, whether it's a retail shopping center or an apartment building, that quote math unquote is just different because people are willing to
Yeah,
pay. When you buy a house or a condominium to live in, even if it's a 4 family, a 3 family, and you're going to live in a unit, that math is different because people are saying, well, I'm going to buy this, and yeah, there's going to be a bidding war, but it's worth it to me because I want to be in that school district, or I want to be close to work, or I see that I plan on holding this building forever, so I will let market rent growth catch up to me, and it's not going to cash flow this year, next year, the third year, but maybe by year 4 or 5 I'm living in a unit and I'm making, but now I'm living for free in that building because the cash flow off the other units is covering all my expenses, right? So the math is a little different. They're not necessarily looking, especially for a single family uh, condo or house, they're not looking for cash flow. They're looking, to buy a place that is in a good neighborhood, good schools, convenience. All these are other factors that are slightly different than when you're looking for a multifamily or other type of income producing property.
makes sense. Yeah, really makes sense. But what then the misinformation would cause in a commercial, if not a bidding war? What do you think could cause?
Well, I think people can become too enthusiastic about the potential for a property, and also too enthusiastic about the uh, the asset's actual performance today. Right? They look at the numbers, they take them at face value. They don't dig deep, so they end up buying something that actually might not perform as well as it did on paper for the past 6 months, 9 months, 1 year, etc. Um, and there's lots of potential pitfalls as to why that might be the case, right? So, looking at things with a discerning eye and a healthy dose of skepticism is a good thing. And as much as this popular phrase that is bandied about here and there, and which is that numbers don't lie, I would disagree with that. Numbers can lie, very much so. And you can't trust the numbers. You have to do your own homework, you have to do your own math, and you have to back into your own purchase price that would provide you and or your investors, if you have any, the required return that they demand in order to buy it. So ignore the asking price. It is really not. It's really neither here nor there. Doesn't matter ultimately. It's what you are willing to pay for a specific return that you need or your investors need, right? Because if you can't satisfy that investor group and you buy a building and you don't provide the returns that you had mentioned to them or even close to it, then you're not going to have an investor group for much longer.
Yeah, true.
Yeah.
And were there any struggles that taught you a lot? And when you stop to reflect, you're proud of how you overcome those?
Oh, I would say there's constant struggles. That's a never ending thing. I think that just goes with the territory for anyone who is trying to run a business. Um, I think that the the struggles range from trying to have processes that you can rely on, so you know that you're following a set standard of rules, so that you're not deviating from your original business plan. I also think those help you stay focused on a particular type of business or property that you're trying to purchase and run. It's very simple or easy, rather, to, as you said earlier, get shiny object syndrome. And for example, if your original thesis was that we're going to buy this type of property in this submarket or major metro, or these one or two submarkets or major metros, and now you start looking at multiple metro areas throughout the country. I've seen a lot of sponsors get in trouble where they say, "Oh, I'm going to go into this market and buy a property." But the reality is, it's very hard for a small group to know a market and a submarket and the streets and the players of that market very, very well in a short period of time. Now, that doesn't mean that you shouldn't shift your thesis, right? If your thesis is not working, then if you don't want to exit the business and want to stay in it, then you're going to have to shift. However, if you think you're just going to go into 10 markets around the country and you're a 2 or 3 person shop and you're just going to buy up all these properties and you're going to be successful at that, I would warn against that. I would pick the 1 or 2 markets, focus on those, get to know them well, and and go from there.
And observe, right? Until you see an opportunity. Because if you keep pinging, you will not grasp the market of that region.
Correct. You ought to know it well enough where you know what the average purchase price is of a unit in a multifamily property in Class C, B, and A. You know what the cap rates are. You know what expense ratios are to run these properties. You know who the minor and major players are in that market, whether it's brokers, property managers, etc. And you also have to understand the economy in those markets, because you could buy something that is, a property that is tied to just a few major employers, right? And if one of those employers goes out because they are not a business that has a lot of runway left in its lifetime, right? If it's a business that's going to get folded because it's a manufacturing company that is probably going to go overseas, or it's producing products that are just not in demand as much as they used to be, then you're essentially buying an asset near dying industries, which is a recipe for disaster, because let's say 25% of your tenants work at that plant or that office, and that office either cuts headcount or folds. Now you have a problem on your hands if you can't backfill the rest of your units with individuals that work at different businesses. This is why people go into primary markets such as Seattle or New York City or LA or Miami and buy properties because of the depth and the breadth of the job market. And I would add that I think first and foremost, people who are interested in investing with a sponsor or buying a building on their own have to look at buying a income producing property first and foremost from the perspective of you are buying the local job market. You're not really buying, yes, you're actually purchasing dirt and bricks and a roof and plumbing and electrical, but what you're really doing is buying the local job market, and you have to suss out what are the strengths of that job market, what are the weaknesses, and that's why people buy in primary cities. They make less cash flow off that. Typically, make less cash flow off those investments. But what they do have is staying power. Meaning, if you own an apartment building in, let's say, Los Angeles or a retail shopping center, and a tenant leaves, the chances of you being able to backfill that tenant at the same or higher rent is is very good. However, if you buy in a tertiary market that's tied to two employers and one of them is having problems, the chances of you backfilling that tenant with another one that uh, is going to pay you the same or more, that probability goes down. And now that's why you're in trouble. That's why people flock to primary markets to preserve wealth and to grow it at a very, very slow pace. But it's what you call a flight to quality, if you will. They view it as, if I buy a property here in 15, 20 years, I believe that because of appreciation, it will have grown in value. And I have basically used it as a hedge against losing money because of the local economy. So they park money there for wealth preservation.
Yeah. And how do you, well, and do you look to diversify? If so, how? In any aspect?
Do you mean like across geographies or across
Or
property?
different assets, or, yeah.
We have not. We've been sticking with our bread and butter, which is value add multifamily, um, and we have certainly thought about buying a stabilized asset in a market. Let's say a building that is fairly new construction, right? It may have just been constructed and leased up. It has a certificate of occupancy, and the building is 95% lease. Um, because buying something like that, if you can buy it where it will cash flow, then you have an asset that you have a lot less work to do than with a value add property, right? There's more risk with a value add property,
Yeah.
albeit you have a higher potential re- return, but you have to work for that return for sure. And then there's also retail properties, which is a property type that I'm very familiar with. I was an asset manager for many years for a portfolio that primarily had retail properties in it, and that's another asset type that we considered. But it is a different it's a different animal. The math is different, as well as having to sell that to an investor base, right? That's different as well, right? Investors who are used to maybe multifamily only might not have the same appetite for a retail property simply because they're just not as familiar, right? And if you're not familiar with something, oftentimes the easiest thing to do, which is understandable, is you just shy away from it and say, well, I'm not so sure. And that's really their way of saying, I'm not interested because I don't understand it. So, thank you, but no thank you.
Yeah. Yeah. I also ask that because, to me, last year in the beginning, um, I was told by my mentor to focus on one type of property. But how can you um, how can you know that when you're starting? And also, if you do that, you might lose a good opportunity if you don't, you know, depending on your spectrum of not buy box. Yeah, it could be buy box, but depending on the spectrum of that, right? That's why I ask as well.
Yeah, you bring up a sort of a classic conundrum, right? It's like,
Yeah,
you have a buy box, you're looking at deals. If you can't find anything, it's only a natural inclination to say, well, maybe we should adjust the buy box, look somewhere else, look at a different property type, and that's not wrong at all. It just comes with potentially more risk if you're moving into a property type or a market that you're just not that familiar with, right? You don't work there, you don't live there, um, you have no experience buying that type of asset. It's just increasing risk. Again, it's not saying it's wrong. You're just increasing your risk by doing that ultimately.
yeah, no, makes sense, makes sense. Yeah. Um, After all those years, what fuels your motivation?
I think what fuels my motivation is very similar to many other people that either invest in real estate or are the sponsors of real estate companies that syndicate deals, or even people that buy their own businesses or start their own businesses, which is you are trying to provide yourself and your loved ones, your family, with a measure of stability, right? Working at a W 2 job is great, but we all, I think, can recognize that the world is a very volatile place, and relying on one cash flow stream, which is a W 2 job. I think more and more people are realizing, and this has been a long time. This has occurred where people realize, corporate world is not what it was in the 1960s, 70s, and 80s, right? Even the 90s. There is no long-term employment. People move jobs every 4 or 5 years. It's rare to see someone in a job very long term, for their whole lives. And that's simply because it is a volatile world. Companies are always changing things up. So people don't feel safe. And the way that they can rest assured that they will have enough, to either retire, feed their family, pay for their kids' college, private school, a car, etc., is to try to diversify. And I think that's what continues to drive me.
Nice. Yeah, well, family is always that's the best motivator. Definitely, it's also um, one of my reasons also to enter the real estate space. And I recently found a new motivation, which is why I started the channel here because I want to help, as I've helped some of close friends, help everyone understand that we all can be successful. Doesn't matter what success is like to them. But you just have to believe in you. So when things speak to the heart, I think that's when we fuels us to and motivates us. And I'm saying that because yeah, family does that.
Absolutely, absolutely. There's nothing more important. So, trying to get to a place where you feel comfortable that you're on the right path of diversification, right? You could have your job, you have your 401k, you might have some stock in a company, but the more arrows you can put in your quiver, that will make you less reliant on that W 2 job. And still, it takes an awful lot of equity to investing in real estate to walk away from a W 2 job. However, even if you were to start investing, you're getting some good returns, your wealth is growing. You lose that W 2 job, even if you have to go back and get another one. There's there's less pressure on you as an individual and as a family because you say, well, I can afford to maybe look for a job that I really want, or maybe I can take some time off here and breathe a little bit, spend time with family, taking care of family members or something. So it just gives you room to breathe ultimately, and I think that's what everyone out there is ultimately looking for.
Definitely, yeah. This kind of freedom, because honestly, we're all, if we don't create our own freedom, we are, well, in a type of jail as anyone. Yeah, totally can relate to that. Okay, now I want to. I do play this kind of game, and that's where I feel the differences from and the experiences of the guests. Um, which all of them are amazing in terms of what they are giving of their knowledge here. Um, let's say I take away, just pretend, everything you've built so far. I want to know, how long would you do it again, and if you would do anything differently.
I would do it again, for sure, uh, for many reasons. One of which, it would be a shame to discard all the knowledge and experience I have. Um, that wouldn't make much sense to me. I think that would lead to nothing but regret down the line. Now, that doesn't mean that I wouldn't have to, if I had to do something else to make a living to provide for my family, I would do that. But that said, on the side, I would still have that itch. I would still have the desire to start anew, if you will, and build a portfolio back up again, and continue on. Um, so yeah, no, I would certainly always be looking to build it up once again.
And let's say I'll tell you, I also asked you in how long time would you do that. Well, let's say I'll tell you, you have to do that in 1 year.
Get back to the same portfolio size in one
Yeah,
year.
yeah, everything you've built that you're proud of.
Yeah. What it would take in that case, because the portfolio's sizable, uh, the mechanics of building the portfolio, finding the buildings to buy, that to me is not the problem. The problem that I would be trying to solve, the biggest one that is equity, right? Raising the amount of equity needed to buy a portfolio of similar size. That is the right now, especially in this market, the trickiest piece of the whole puzzle. Um, and I would be focused on trying to team up with some larger operators who might have more capital, and or if they don't have the ability to attract larger check sizes, so I could get involved in larger deal sizes, because we bought a lot of small deals over the years, and to recreate the portfolio with that many transactions, you wouldn't be able to do that in a year. Meaning, I have to do less transactions with larger properties.
Got it. No, it makes total sense. Yeah, total sense. In that sense, what success looks like to you?
Oh, that's a great question. Um, Again, it goes back to family. The ability to provide for my family. Um, I'm not someone who's needs a fancy car, the big house. I don't want the big mortgage um, at all. The ability to spend time with my family, quality time with them, and not have to do something for a living that I don't want to do. That to me is a successful life.
Oh, that's beautiful. Yeah. And I want to lend you a billboard now. What would you put there?
Well, are you referring to? Are you asking me? Um, what would I advertise for our business ultimately?
How would you use it? However you want it. It's yours.
This is a good question. This is an interesting one. I've never been asked this before. Um, I would probably try to somehow um, you know make that billboard advertise for something that can make the world a better place. Whether it's a charity or someone that or group that needs help raising money, something along those lines. It's something that I am completely behind, and I don't know if I would necessarily use it to advertise for, let's say, capital raising for buying apartment buildings. I think it would be put to much better use if it could be used to do some good in the world, so to speak.
So would you use it to give it back somehow?
Yes, exactly. Help someone who is less fortunate, a group, an individual that is less fortunate than many of us are.
Great. Yeah. Nice use it. Yeah. Um, how do you keep updated in terms of keep learning? What books and or any resources that you recommend?
Well, a number of things. Mentioned books. I mean, I'm always going through books. I have an incredible stack here on my desk of books that I purchased that I'll take one down every couple of weeks. That never ends. I would always recommend that you be reading books nonstop. The other thing that I'm focused on, or starting to spend more of my time focused on, is artificial intelligence and learning about its potential impact in commercial real estate, how to use it, what tools are out there that can I utilize. Um, it's a very confusing space right now. To be, I describe it as the Wild West. It's this sort of explosive growth sort of field. Um, However, there are there's a resource called or website rather called ACRE, which is run by a couple of fairly well-known commercial real estate veterans, incredibly competent individuals that teach real estate modeling classes, very advanced classes, and really all things nuts and bolts for real estate. And they have created a number of free trainings, modules, etc., with regards to artificial intelligence, and they give their opinion on where they see the industry going, its potential impact, what you should be learning to stay ahead of the curve, which I think is incredibly important in today's day and age. So that is a resource that I would highly recommend as well.
ACRE.com.
Yeah, let me see exactly. It is. Oh, it's actually Adventures. Oh, hold on one second. It's actually Adventures Inc. INCRE.com. So Adventures in CRE, standing for commercial real estate.com.
Got it.
And on their homepage, on the upper right hand corner in the menu, there is an AI drop down list there that people can get started, essentially.
Oh, that's great. I didn't know that. Thanks for that.
No, my pleasure.
What I can tell, being on my still W-2 from a big company, is that weekly things are changing. So the main difference I would say for this transformation, this revolution, is the speed.
Yes.
New things are coming every week, so it's yeah, mind blowing.
Yes. It's difficult to know where to start, what to focus on. that is something that I haven't figured out. I wouldn't claim to have figured it out. However, it's one of those things where I think you have to dive in, absorb as much information as possible, use some of the resources like the one I just mentioned to kind of look at individuals that might be at the forefront uh, of the changes that have or could potentially occur. Um, I don't think there's any other way to go about it. I think it's going to be a very messy sort of process. But the more you understand AI, large language models, what they're able to do, and all these AI tools that are coming about, of which I think I have something like 50 or 60 bookmarked at this point. I haven't gotten to all of them to figure out, what they are. I haven't taken a really deep dive into all of them for sure, but I recognize that I had better keep abreast of this to understand how I can use these tools um, to make the business more profitable, to save money, to make money. It really runs the gamut.
Yeah, yeah. We all should be doing that. Investigating a tool at a time. And okay, can I use it? No, just forget for now. Okay, how can I leverage this one? Oh, I find one. How can I leverage this one? Yeah, we should all be doing that for sure.
Yes.
Yeah, because it's hard to understand all with that speed and the capacity. So yeah, if you're doing that, awesome. Happy to hear that. Um, Man, I feel more energized than when I started the conversation. You taught me a lot, and well, I'm going at the end of every session. I take some time and I write for a bit. So you definitely gave me a lot to think, and it was awesome. I really appreciate that. Any last thoughts or messages?
I would just say that, like for anything that is worth pursuing, it is not going to be easy, um, but it can be incredibly rewarding once you get to a certain level of competency and knowledge. That's where it starts to become enjoyable, and the fruits of your labor start to appear, and that payoff is very rewarding. But I think this is a great time to be getting into this space because of the past few years have been a little bit tumultuous with the debt markets having been reset, with property purchase prices having a reset to a degree. Um, so I think this is a good time to be jumping in and looking at deals, whether you're looking to buy something on your own or invest with a sponsor.
Oh, great to hear that. Because one thing that I'm learning is that yeah, if you believe it, keep doing the work, keep showing up, it will pay off. That's for sure. That's what I hear from every guest.
And
Good,
I couldn't agree with them more.
awesome. That's awesome, Michael. Thanks a lot, man. We'll certainly talk soon. And yeah, from the bottom of my heart, thank you.
No, thank you for having me, Fernando. I appreciate it.
Good. Thanks, man. Talk to you soon. Bye.
Take care.